day. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Wednesday, the 11th of December, 2019, just after 4:35 p.m. Central Daylight Time. You know, I was on Fox today. First time I'd been on, I had nothing to say. I was listening to the show just before me. I had listened to the Fed chair. I had heard the word globalization, and my brain just got caught on that because the Fed hasn't figured out the Phillips curve. They are having trouble understanding full employment and why it's not creating inflation. I, for a very long time, have said it's probably due to the fact of technology. And you can go anywhere in the world to buy a service. You can go anywhere in the world to get a lot of things for free. I mean, yes, I subscribe to a lot of news services, but you get a lot of them for free. And I'm just making a point here that technology changes things. It certainly changes pricing power. I go to Amazon, but then you get a wiki buy and other things, and it tries to get you into things that are less expensive. That takes away purchasing power. But in the gold market, it heard the Fed say that most of the members do not, on the dot plot, think that we're going to get an interest rate hike next year. And that put the dollar down, put the gold up. Now, while it settled at $14.75 today, the late trades in the day were much closer to the $14.80 level. Remember, the settlement in futures happens at 12:30 p.m. Central Time. The Fed doesn't even put out its announcement till 1 p.m., so this is where the market was at that time, but it was up a bit from there. Platinum, copper, all these markets up. Now, the next event that you have to look at is tonight they're going to be voting at the Judiciary Committee on impeachment on the president, the exact terms. They'll probably get to the House next week for the vote. Then my guess is a very fast trial is going to happen in January. While the president wants to bring everybody out, I think prudence is going to win over from the senators, and they'll say, let's just get this thing done. That'll be out of the way. But what's the big event? You got Brexit tomorrow, and the polls are saying this thing is getting much closer than people thought. And then you have Sunday, by Sunday, the possibility of what do we do with the tariffs? Are new ones going on or not? It's really that simple. A lot of risk ahead of us. When we come to a weekly gold chart, the market is doing what I had mentioned yesterday. I was hoping that this market would get away from that 1459, 1450 level, and it has. The market's back up to near 1469.40 on the weekly charts on a close basis. When you take a look at the daily charts, you can see how the market's, what's it doing? It's spinning in here. The market is trying to figure out, does it take out this low back into this 1450 area to break down? Does it take out the 1490 area to move up? The seasonals in gold, and seasonals are just that, past history. They don't guarantee the future. But the seasonals call for this market to be strong in the February, right as you enter next week. So something I keep an eye on. When I'm looking at the chart, you know that I wanted these to hold. I want to keep the pattern of, because I'm bullish from the seasonals, and now that I've seen what the Fed does. I've got higher lows, higher highs. So that's a reason to be bullish. I don't want to see 1463 taken out. The very next chart, you finally got a settlement over the 18-day average. So I've got now the pattern of higher lows, higher highs over that number. Now, we had it back here the same way, and the one slip down that happened here in the 1463 did not take out those lows. So if the market decides that it can move up, you've got one resistance area at 1499.60. You have support back at 1472.90, and you've got Bollinger Bands that are winding up sideways. I could be 100% wrong on this, but I like this spinning here. I like the seasonality, and then I look at where the market's at in momentum, and it's just turning up. So if the market rallies right now, first resistance, the upper Bollinger Band, 1487. Then, if it can continue, near the 1500 level. If it breaks down support around that 18-day average close, 1472.60, and the question is, can you get and break down through all that and close under the lower Bollinger Band, and if you will, kill the party. When we come to GLD, the pattern is the market was able to get over the 18-day average and make a run for the upper Bollinger Band. It hasn't taken out this past high, and if I can come back to it, it should work right now. That past high was 139.45. So the market now is back up to a high of 139.30. If it takes that number out, at least what it does in this sense of it is it keeps the market, number one. The question is, does it stay in the Bollinger Bands? Number two, it would break the downtrend of the swing lines, which is countered anyways, because when you settle over the 18-day average, it's a filter on the swing line. Momentum is turned up. Two areas of resistance, the upper Bollinger Band at the 139.43 area, the next resistance 140.18. But I'm looking at this sideways action, wondering and scratching my head, okay, are the bulls about to take real control of the market? The gold-silver ratio, you can see how the market's getting a little bit of a correction with silver pulling back here. I don't know why I got that line down there, but don't worry about it. The GDX juniors, you've got no trend. You've got a higher high, lower low. That's not a trend. The bias is up and you're in overbought territory. The same can be said of the GDX itself, because any reading over 70 is overbought. The rally today got as high, let's see, as 27.85. The last rally high was 27.86, just mistaking it out, but it's knocking on the door of knocking out the downtrend. Then we get to the silver market, which pulled back to what I call that line in the sand. The high today, 1702.50. The 18-day average, 1702.60. If you round it to the right number, in other words, it trades half cents, that's about where the resistance is. If you can take out 1712.50, you end this phase of the downside. There's another thing that I noticed. The market had very little carry through on the down. I'm not in silver as bullish as I am the gold market, and I'm not certainly telling you to buy the gold. You're not hearing that. I'm just pointing out there's more things going in the gold. And in looking at the silver, it's acting like a market that wants to correct an oversold condition. In the copper, how many days up and over the upper Bollinger Band? Well, today you finished at 278.95, well over it. Yesterday you were over it, so that's day 2 in a row. This was day 3, and here's day 4. So what the market's doing is it could set you up for a Thursday higher close. You'd have 5 in a row. That's excessive. So the 6th day, if you look at the sugar chart, you'll see markets often pull back, and they don't give you 6 in a row over. But it's not a weak sign. Somebody has made a bet or is betting that the combination of maybe the tariffs being extended, maybe China needs more copper for their internal purposes. We saw that they were a big importer of it recently. This market is using this area as something of a base. What could pull the plug on it, of course, should the market see the tariffs go on December 15th, well then all bets are off everything, because I don't think the market's ready for that. In the platinum market, now you're getting a little excessive on the upside. Certainly the sideways action is bullish. I told you as the market got over this high the other day, right through here. That was it set it into an uptrend, but you went right to the upper Bollinger Band. And I certainly think the pros took some money off there. The market got higher, finished at 945.50, didn't look back, and it's still not looking back. It's still running to the upside. Overbought, running to the upside, bullish, and you're getting a crossover. The 18-day average got back over the 100. I don't see anything bearish on the chart. All I see is the market's overbought. But if you lock in a trend that's going to scream, you inevitably go from overbought to embedding. We'll see if it's possible to do that. Palladium market, this is the one that I've been talking about, and it just continues on. And what kind of number? I heard people talking $3,000 an ounce today about it. Don't know if it can get up there, but we know that as long as you've got a world dealing with climate change and worries about pollution, this metal is in vogue at this point. It could get hit if we see the tariffs go up on China, because, as I said, everything that's used in industry could get a hit on that. In the dollar index, I was very surprised to hear the Fed talk today, Fed Chair Powell, and not say that they're data dependent. They're now looking a year out and saying, no, we think we're comfortable and we don't see anything to do. When the market goes against them, we're data dependent, and you suddenly have a crystal ball for a year. Nobody has a crystal ball for a year. I don't care if he's the Fed chair. Nobody. I've been around this too long. So we've got a market where the dollar's breaking down because the Fed basically said that interest rates aren't going to move for quite a while. That hurt the bank stocks as well if you were paying attention to those. So that is what pushed down the dollar. You take a look at it all, interesting day, and I want to remind you our Cyber Week sale is ending. So you have a few days to convert or buy a new subscription for us, and we throw in the $179.95 charting course. Yeah, we're going to throw it right in for you so that you're able to learn the same techniques that you see me doing here. I created the course so I know how it works. And I start off teaching you with animation. For example, what is a swing line? Then I'm going to walk you through how moving averages are created, what they do with an animation. Then I'll bring you to charts in each one. That's why there's 54 videos. But if you can see it in the animation, you see it on the chart, and I walk you through how to draw them and how they work, you start learning these 5 steps of the technique that I think are so important. What you don't see here are the window envelopes, because I don't want that many lines on a chart for these videos. Those are in my morning subscriber video, and you get all this automatically if you can come in with our research. So you're going to find some interesting things. Now, let me tell you about the research. We offer a special pricing for a 1-year package of our research. In some cases, I'll give you an example on the videos in the morning only. They're $156 for the year. You're getting the $179.95 value. And they go up the ladder. If it were me, the best package I have is my full subscription. It's my writing. It's my special reports. Remember, on the special reports, remember that if you're not a full research student or not buying any of my research at all, after 3 reports per year, it's actually not per year, per 12 months. We keep track of it, and you won't be able to get those unless you pay for them. So it all starts adding together. You can go to our website, look under research. You can go to us and call us tomorrow. My staff will be here to work with you. And with that, I'm Ira Epstein.